Welcome to weekly view on markets. Markets corrected around 1.5% during this week due to increased global geopolitical tensions and breakout of war between Israel and Iran at the weekend. Major correction was at the weekend due to this. Domestic sentiment was subdued after a air crash in Ahmedabad in which around 300 people were killed. India VIX has gone up by around 3%, but there is no major panic that was seen in the markets. FIIs continue to sell in this week also, but DIIs have bought at lower levels, providing support to the markets. SIP investment by retail investors has gone to record levels of 29,000 crores in the month of May 2025. This money is coming into the markets through DIIs. There is sufficient liquidity in the market due to recent CRR reduction by 100 basis points by RBI. We may not see major corrections, but upside also looks difficult due to global developments. Investors should have confidence in the resilient Indian economy and remain invested to get good returns in the long term. Nifty closed at 24,718 with a loss of 284 points, that is 1.14%. Bank Nifty lost around 1,051 points, that is a loss of 1.86% and closed at 55,527. Mid-cap index lost 782 points, closed at 58,227 with a loss of 1.33%. Small cap index lost 207 points, closed at 18,374 with a loss of 1.12%. India VIX is at 15.08. It has gone up by around 3% during this week. So major correction was on Thursday and Friday due to the geopolitical tensions and erupt of war between Israel and Iran. Almost all the sectors have lost except few sectors. Information technology gained about 3.15%. Healthcare, pharma, media stocks all gained around 1 to 1.5%. Realty sector lost the most, it lost around 3.13%. PSU banks lost around 2.33%. FMCG, consumer durables, NBFCs all lost around 2%. Metals, auto, infrastructure, private banks, public sector companies, manufacturing all lost around 1%. Manufacturing commodities lost around 0.5 to 1%. So market bet was negative. So overall sentiment was very subdued. Even though there are no major losses, the sentiment was negative. Now let us look at the technical charts. This is the daily chart of Nifty. We can see here Nifty has crossed this resistance and has gone above 25,200 levels. But again, by the weekend, it has come back and now it has closed at the support level of around 24,600 levels. So we'll have to see, majorly it depends on the global developments in the next week. And if the market breaks this level of 24,400, then we may see further small correction in the markets. But for a long term investor, that will be a good buying opportunity. This is the chart of Nifty mid cap index. You can see mid cap index has taken resistance at around 60,000 level, then it has come down and now it has closed at 58,227. If it goes further down, there is a major support at 55,500 level. This is the chart of Nifty small cap index. Small cap index was also taken resistance at around 19,000 level. After hitting this level, it has corrected. Now it is the support level. From here, whether it will go up or it will break this support, we'll have to see in the coming week. It depends on the, again, as I told, majorly on the global developments. This is the chart of Bank Nifty index. Bank Nifty index in the previous week hit a record high, and after that it corrected continuously for 3 4 days, and major correction happened on Thursday and Friday. Now it has again come back to the channel. This channel is on the lower side is 54,000, and on the higher side it is 56,000. So Nifty Bank may trade in this level in the coming week also. Now let us look at some of the macroeconomic fundamentals of the markets. Indian macroeconomic fundamentals continue to remain strong. RBI Forex reserves is at a record high of 696.6 billion US dollars. It has gone up by 5.1 billion dollars during this week. Foreign exchange rate is at 86.08. It has jumped from around 85.4 levels uh, after the breakout of war in the Middle East. Dollar index is at 97.91. Brent crude prices has jumped by more than 10% due to the war in the Gulf region, and it is at $75.18 per barrel. The sudden jump in crude oil price is definitely not good for Indian economy and for Indian capital markets. Higher crude price will push up inflation in India as we import huge amount of oil. So we'll have to wait and watch. This is not a good sign that oil prices are going up. Gold prices also jumped beyond 1 lakh. So 24 carat 10 gram gold is at 1 lakh 168 for 10 grams. So whenever there is a war like situation, the gold prices goes up. I keep telling again and again. This time also we have seen from around 97,000 for 10 grams, it has gone beyond 1 lakh for 10 gram. So this is what happens during a global crisis. FIIs have sold 1246 crore in equity during this week, and DIIs have bought 18,547 crore in equity in this week. Continued support and buying by domestic institutional investors is giving good support to the market at lower levels. Retail inflation for the month of 2025 has come at 2.82. This is in line with RBI expectation as they cut the interest rate by 50 basis point in the last week. They were expecting the inflation to come down. That is exactly what has happened. A new war has broken out between Israel and Iran, and escalation of the conflict is continuing even today. So this will have an impact on the oil prices and in turn on the Indian markets. Overall sentiment was subdued due to the air accident and the war breakout during this week. Charts show that indices have retraced from the resistance zone, and they are likely to consolidate in the coming weeks. I don't see any major correction coming as it is supported by strong SIP flows by retail investors, good liquidity in the system, and buying by DIIs at lower levels. But also the upside is limited in the market. Consolidation is likely to continue in the market. Global geopolitical events will sway the markets in the coming weeks till we start getting quarterly one results. That will happen maybe by 10th of July onwards. Next month, quarterly one results will come. Till such time, in the absence of major domestic cues, is a geopolitical development that will have an impact on the markets. Mutual fund investors should remain invested. They should continue their SIPs. They will get good return in the long run. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.